Scott, thank you so much for joining us today. I have personally been part of your mastermind for 2 years already. I can't believe
Mhm.
time flies.
Yeah.
And I'm so so happy that you made the time to talk about the market and also about mastermind, your mastermind, why they're so important.
Mhm.
But first, why don't you tell us a little bit about you?
Sure. Well, thanks for having me on, Stephanie. Always good to be back in touch with you, even if we're not in the same room. This is a great way as well. Gosh, got started in self-storage back in 2005 after being involved in single-family, multifamily office buildings and warehouses. And, really, I think like many people, everybody loves rental real estate if it weren't for the tenants and toilets and trash. And so that was us. And we certainly wanted to look at other look at other avenues and some other asset classes in real estate because we love all the benefits of real estate, appreciation, depreciation, passive investing, cash flow, building a retirement. But we just the tenant and toilet side of the business was really just not what we wanted to, not a part of the business that we wanted to be involved in any longer. And that's when we began to look around in the landscape and found self storage. I mean, there was parking lots, vacant land, and storage that didn't have tenants and toilets. And the more we looked into self-storage, we recognized what a great asset class this was, and that it was also the best performing asset class in all of real estate. It was right under our noses the entire time, but we overlooked it because it wasn't sexy, it wasn't attractive. And then once we began to look into the numbers and then invested in our first facility, yeah, we that was it. We saw the light and sold off all our other assets and went 100% into self-storage after that. And so through the journey we've along the way I was the head of the president of the Central Indiana Real Estate Investors Association, and people began to see what we were doing in storage and gain a lot of attention. And so we began holding some workshops to teach people how to do it the way that we were doing it as well. And that kind of took off, and one of the national agents for the real estate speakers nationwide contacted us and wanted to send us out to other real estate investor groups just like ours to speak and teach on self-storage. And that took off as well. And so we found ourselves with basically two 60-hour-a-week jobs that we didn't have time for. And so through the years, morphed that into really scaling back the hours, but combining the two businesses and doing it in such a way that, it drove investors towards our deals so that we could do partnerships, and then, growing that side of the business where as people begin to learn about it from either outside of our ecosystem or within, the people that were truly growing and scaling their storage businesses like yourself. Yeah, we put them all in the same room in our first mastermind, and really the industry's first mastermind many, many years ago in Las Vegas after one of the ISS shows. And that has grown to be the most vibrant storage mastermind in the industry as well. And that's where yeah, that's the room that I love, as you know, because it's all like-minded individuals that are helping each other and doing business with each other and getting better and keeping each other accountable. And it's just it's an honor to be able to I can't even say lead it because, as I don't lead it. I'm just a moderator, and the rock stars that are a part of the mastermind are the ones that really lead it. And it's been an incredible journey. We're in a we love the place that we are right now in terms of my business and our businesses. And of course, storage is always the best place to be, whether the economy is booming or even as we head into a contraction like we are right now. Storage always does well. So, yeah,
Mhm.
life is good right now.
Yeah, it's a great time to buy, finally.
Yes.
And yeah, I personally think the people that lead masterminds have
Hmm.
sometimes a thankless job because people
Hmm.
don't really tie what they get out of it
Hmm.
to the mastermind. And I think it's so
Hmm.
important to always go back to where did you meet these people? How much money did you make, right? And because of the
Hmm.
information you learned, or how much
Yeah.
money did you save from getting into trouble
Hmm.
because of the
Hmm.
information that you learned? So
Hmm.
even
Hmm.
though masterminds are more expensive, the return on investment is, for me at
Hmm.
least, minimum right now,
Yeah.
20x
Yeah.
between
Hmm.
equity, partnerships, things that you learn. And
Hmm.
so I really, really, really think is important for people to
Hmm.
join masterminds.
Hmm.
And you have been doing self-storage for 20 years.
Yeah.
So
Hmm.
tell us a little bit about that. Maybe we can jump into the market first and then we'll jump
Hmm.
back into masterminds. But how is self-storage
Sure.
doing today? And we can take it from there.
Sure, we're really bullish on storage, and I say that all the time, Stephanie. It doesn't matter what the economy is doing because our asset class is largely unaffected by what's happening. When things are good, people buy more stuff, and there's a need for storage, and so we do well. And again, when there's a contraction in the economy and people are losing their jobs or businesses is going a little slower, and they have to put their inventory in storage or they sublease their office or whatever their business looks like, we benefit from that as well. And so, we are, as you just mentioned, we are heading into a time that we've been preparing for years, which is kind of the intersection of all that. Yes, interest rates are a little higher and our cost of capital is higher, but we are seeing a contraction in the market, which is causing people to downsize, businesses to downsize. We saw, I heard just this morning, as a matter of fact, that Austin, Texas has lost like 20% of the workforce is unemployed right now, and some of these companies are laying people off, and so
Wow.
that's the most dramatic I've heard around the country. But there is a pullback right now, and the jobless rate is a little higher than even what the governmental statistics would show, because we're seeing it and feeling it in the marketplace. And so we are right. We've just come to that place and really passed it about 30 days ago, where now rates are going back up again. We are in the leasing season for self-storage, and so you typically see an increase in rates, but we haven't seen as much activity in the housing market just because rates have been higher. And that is generally what drives a lot of our occupancy and a number of our searches that come into our system for our stores. And that accounts for about 40% roughly of our traffic are people that are moving and buying new houses, in addition
Mhm.
to all the other reasons why people need storage. And so when the market has been down for housing, that's affected us. But now we're again still seeing that place, the intersection of, we have the ability to raise rates. The interest level in storage is going up. There's been a leveling off of interest rates, and so people are buying houses now and moving. And so we've been very pleased with what we're seeing so far in the leasing season, and we've been bullish all along in terms of our acquisitions and developments. We haven't had as many new development starts as normal because that is a little more costly with construction cost and the increased cost of capital, the length of time that for our interest reserves and our lease up reserves, because of the cost of capital, some of our deals don't pencil out at today's interest rates. There's others that we've been in the middle of and have started that work and pencil out, and we're moving forward with those. But on the acquisition side, yeah, we're very pleased with the deals that we're seeing coming to the market right now, and we think that Q3 and Q4 is going to be even better when some of the folks that dare I say weren't in a mastermind or didn't get themselves educated on storage got into the business a few years ago, and now it's time to refinance their properties, and they didn't really know what to do. They didn't know how to increase the value of their facilities, and they didn't mind the store, and they didn't look at their numbers. And now they're in a position where they perhaps can't refinance. They're not in a solid financial position to do so, or a performance from a performance standpoint, and so they're being forced to sell. And that's what we've been preparing for. Is we knew that there would come a time again. We've been at this will be our third recession that we're heading into, the fourth, basically, call it that, with the pandemic. And we've seen this
Mhm.
pattern before, and we've been preparing for this, and now we are seeing those deals come to the market, and we have the capital and we have the lending relationships to take advantage of the situation and what the market is bringing to us. So again, we're very excited about our prospects here in 2024.
Do you think self-storage is being overbuilt in places? Because sometimes I do get this question,
Hmm.
oh, the cat is out of the bag. Everybody knows about
Yeah.
storage right now. Well,
Hmm.
I have my opinions, but I'd like to hear yours
Yeah.
as well.
Hmm. Well, yeah. Sometimes we get these questions, Stephanie. Everybody's always asking
Yeah.
because everybody sees it, everybody hears it. It's a big fear, but it is out, and I mean this in a kind way. It's really out of people's ignorance of they just don't understand storage, and they don't understand how we approach the market and the market analysis, the studies that we look at and the data that we look at as well. And so, first of all, you can't really say that the industry is overbuilt. There's no such thing. If everybody's rates all across the country are going down and everybody was at 50% occupancy, maybe, but I don't. We're just never say never, but I don't think that we would ever get to that standpoint. There's lots of safeguards in our industry, and we do know what it takes to do our homework and understand as developers what makes a successful self-storage development project. And so right now with today's very difficult capital markets, appraisers, lenders, private equity partners, they're not just throwing money at us, assuming it's going to win. They are forcing and they want to see, our feasibility studies and the demand studies that we're doing in the marketplace to understand what a deal looks like before they're going to grant us a loan or loan
Yeah.
us, our limited partners that are going to come alongside of us or the hedge funds and invest with us. And, shame on us, but we shouldn't be going forward if we don't have that, and we really wouldn't get it anyways. And so there's kind of a self-policing of the industry, if you will, that really doesn't allow for overbuilding. Now, it has happened in certain areas, and we've seen that where there's a softening of rates and there's a lot of competition. But usually it's a function of competition doesn't coordinate, when they're going to build a facility. And so if you, from time to time, you have a couple of players within a 5 mile radius in a trade area, or maybe three players that are coming online at the same time, and they're all trying to buy occupancy, and so they're lowering the rates. And so, yeah, that may have an effect on the market, that market, that 5 mile radius, for a short amount of time. But beyond that, once they begin to lease up, because there is demand for it and a lack of supply, it'll catch up eventually. So I don't. It doesn't mean that I just ignore and throw caution to the wind and I say, oh, we can never be oversupplied, because that is 100% not true. But I think a lot of the fear or the comments that are made out there, the questions that I get that are based out of fear or out of just not knowing the industry, are because of just that, not a true market issue in terms of oversupply.
And another thing that I've observed and seen people talk nowadays is the fact that people are moving in with family members because of inflation.
Mm-hmm.
Things are very expensive. They don't have a
Mm-hmm.
ton of money.
Yeah.
And so they're moving in. Therefore, where are they
Mm-hmm.
going to store their apartment that they just
Mm-hmm.
left behind?
Mm-hmm.
So that's
Yeah.
another reason why storage is such a beautiful asset class that does
Mm-hmm.
well in
Yeah.
both good and bad
Huge
economy.
demand driver, huge demand driver. Yeah, again, when we have a downturn in the economy, yeah, individuals, they move in with each other, they downsize, and they have to have a place to put their stuff until things turn back around for them again. They're not going to sell it all or throw it all in the dumpster. As you just mentioned, Stephanie, it's the same for businesses. If there's a contraction in their business, they may, they may sublease the space that they're in. They may take some excess inventory or even raw materials and goods and put them into storage until the economy turns back around again. But they usually don't get rid of everything.
Yeah. Yeah. And within self-storage, there are many
Mm-hmm.
other subclasses,
Mm-hmm.
of that. If there were something to potentially happen to the industry, you can always
Mm-hmm.
convert to something else. That's just my opinion there.
Yep.
Um,
100%. I mean, we're even seeing, Stephanie, that different uses in terms of our existing facilities as well as new development. The race for the last mile for the
mm,
Amazon delivery, and anybody else that's delivering online. To be in the neighborhoods, to get to the neighborhoods, to be able to turn that around, to have the warehousing in place in the neighborhoods, to have the goods, the inventory in place in those neighborhoods, to get it turned around quickly. That requires having warehouses out there, and storage is already there, or storage is being built, and adding on these 1,000, 2,000, 3,000 square foot spaces within storage facilities that are being utilized and being rented up by the Amazons of the world, and many of the other folks that are trying to get their inventory into the neighborhoods. And so, yes, I don't believe that there's a shortage of opportunities and ways that we can utilize this asset class, because it is underutilized, in my opinion.
mm-hmm. Yeah, exactly. And many other uses also.
Hmm.
Um, thank you so much, Scott. Let's jump into mastermind talk.
Sure.
What are some things that you have seen happen at your mastermind? Maybe we can start
Yeah.
there.
Well, I'd like to say that a lot of the things that we've seen are things that we've, you know, built an environment in which, all the good things that we see in a mastermind can occur, and some of that is true. As we, take a step back, we recognize that, following Napoleon Hill's model, as you've seen and heard me say several times, Stephanie, this truly is our mastermind. Is, first of all, it's pretty unique. There are many other masterminds out there, including other storage masterminds, but ours is really the only one that follows the Napoleon Hill model, which is when like-minded people come together that are operating at a certain level, that good things happen. They share best business practices. They can do business together. And so from the beginning, that's the way we designed it. And we see other masterminds out there where they'll just accept anybody into the group as long as they can write a check. And it's an interview process, and it's an exclusive group that we've put into place in the mastermind and in ours. And so, when you put a group of exclusive people that are operating at a high level together, then yeah, it's not 1 + 1 = 2. It's 1 + 1 = 10. And that's what we've seen is the level of business that is done. Yes, this isn't our mastermind is not educational in nature by design, like our self-storage academies are and our other education products. The mastermind is truly where educated people get together and they do business and they're operating at a different level. And so, what we've seen is longevity. First of all, we see relationships at a deep level. These people are going through business life together, and then they're also going through life together. We see several of our
Yeah.
members that are doing partnerships. They're hiring each other. They're hiring the management companies that are in the group to manage their facilities, and then they're growing together and creating partnerships within that. We're seeing private equity folks come into the room because they recognize that our mastermind is different and unique, and that the people in it are very unique. And we've also designed this to be a safe place for people to be able to come share their challenges that they're seeing in their business, and to be able to get good, solid feedback from a board of advisors of people that they know, like, and trust because they've been in the room and they've been together for a while and that have had those experiences because they are operating at a higher level. And you don't get that in a room that has, a lot of folks that are new to the business or not in their first facility yet, that can't lend anything. And so, from that standpoint, that is really, that's where the magic happens and has happened is when you get a whole lot of folks that are doing some really cool things. When you put them all in the room together, as they say that the fire burns hotter when the coals are closer together, and we've seen it. And yeah, it has just been I never would have expected for us to get to the place that we are, and we still have more to come, but to see the amount of business and the level that we're at, as the mastermind as a whole, puts us in one of the top. If you were to add up all of the facilities and the square footage of the members in our group, we're pushing top 10 if we were all operating as one individual, like a REIT or an operator. If you look at the list of, the largest companies that are in self-storage, we'd be darn close to the top 10 in terms of what is represented there. So the experience level that is in the room and the things that people are doing on all facets, from wholesaling to purchasing to acquisitions to conversions. I mean, you name it, we cover the gamut.
Yeah, yeah. It's truly wonderful. And you bring in speakers in the industry, bankers, lenders,
Mm,
etc.
mhm,
So that is always very helpful to understand the state of the market. Um, um, just really quickly off the top of my head, one example was
mhm,
when I was talking about building my first facility, and I asked the group, "Oh, should we put
mhm,
solar there?" And
mhm,
somebody in the
mhm.
group said, "Well, investment firms have a mandate now of a certain percentage for green
Yeah.
projects."
Mhm.
Boom. Wow.
Yeah.
How is that
Mhm.
going to translate into receiving investment or whatever it is that is going to translate into? But that's
Mhm.
just an example, right? Another one
Mhm.
recently is,
Yep.
oh, we have this other piece of land in contract. Should we be near the freeway, or it doesn't matter nowadays, right?
Mhm.
I thought it
Mhm.
did matter, but it doesn't
Mhm.
because everything is on
Mhm.
Google now. So long
Mhm.
as you have good real estate on Google, that's really what matters.
Yeah. Mhm.
So those are just some quick examples that,
Mhm.
I think is important to highlight because these
Mhm.
things, you cannot put a dollar amount to it.
Mhm.
Um,
It is, and so many more. I mean,
yeah.
the idea behind this was, once again, is that this is a place where people can come, even though they're growing and scaling. They haven't run across every situation, as you just mentioned. There's two that you just mentioned. And I was aware of the first that you mentioned about many of these hedge funds and private equity companies that have green initiatives, and they will only invest, or they have a mandate to invest in companies that have a green initiative as well. And so we've added that into our programs and our offerings, and making sure that we are not only promoting that and touting that, but in some cases we've looked at the design of our facilities and looked at other ways in which we can improve upon that. And even if it costs a little more, knowing that we can get those investors if that are looking towards projects like ours, because we set ourselves apart from those, and so many others, as you mentioned. There's if you have a challenge or a question in the industry, somebody in the room's got an answer or has experience with that, or we can find that experience outside of the room because of our vast array and our Rolodex and our connections that the entire group has.
Yep. And everybody's just truly, truly wonderful people. Plus, there's an aspect of prayer,
Hmm.
every time we meet, and I really
Hmm.
appreciate that. And I think that's a beautiful thing.
Hmm. Well, I think like-minded people attract like-minded people, and so yeah, there's a comfort level when we all get back in the room together, and I never want to leave when it's time to go.
Me neither. Wish it was longer.
Yeah, me too.
Well, Scott, thank you so much for everything you do. I really
Mhm.
appreciate from the bottom of my heart.
Mhm.
Um, I know listeners can get in touch with you from an investment perspective and also from
Mhm.
the mastermind perspective. And I'm
Mhm.
sure those are two different websites. Would you mind sharing those with us?
Yeah, of course. Actually, you can go. We've combined everything into one now. So if you just go
Awesome.
to yeah, much easier. And all the marketing folks said this is the way that we are going to do things, Scott. So who am I to get in the way of that? So selfstorageinvesting.com for all things self-storage. Selfstorageinvesting.com, where you can learn about learn about the business. We do have an education component to our industry. You can click on the tab for the mastermind to find out how to grow and scale your own business. And then also there's a tab for investing passively in our projects and coming alongside of us as a limited partner as well. And lots of free resources and downloads and ways to get into contact with us as well. So, Stephanie, thanks so much for all the kudos, and we appreciate your contributions and everything that you bring to the mastermind as well.
Thank you so much, Scott. And by the way, Scott has phenomenal returns for the last 20 years since he has been doing this. So I wouldn't have invited you unless I really trusted you and, you know, have seen what you were doing at the mastermind. So I really appreciate all that you do for your staff and your investors.
Yeah, well, thank you, Stephanie. I appreciate you too.
Thank you, Scott.